Good day, ladies and gentlemen. A warm welcome to another technical summary video presented by me, Letty Janse van Vuren. Our topic for today is the document that was issued by the IASB containing 8 illustrative examples. This is all dealing with reporting on climate-related and other uncertainties in the financial statements. So let's go and have a look. We're going to start off, as always, by looking at why this is important, how it affects us, how it affects our clients, short introduction, going through an overview of the publication, and then looking at what the contents are. And then lastly, I'll give you the link to the source document. If you look at my story and pictures here, we are dealing with climate uncertainty. And in fact, any other uncertainties, but we are most definitely in the sustainability realm, right? A document issued by the IASB, and it deals with the IFRS standards, right? Because it's how to disclose it, how to disclose climate uncertainties and other uncertainties in terms of the IFRS standards. So we are in the realm of sustainability. Remember, we are dealing with IFRS S1 and IFRS S2 are the two sustainability standards, and IFRS S2 is the specific one on climate-related disclosures. Now, not all your clients have got access to all that information in terms of climate-related disclosures or uncertainties as such. So it's all just about providing information to the users of the financial statements. The abbreviations, the IASB is the International Accounting Standards Board. IFRS throughout means financial statements. IFRS we know is the International Financial Reporting Standards. And then the IASB is the International Sustainability Standards Board. So the IASB basically liaised with the ISSB to be able to compile this exposure draft. Right, why is it important? Well, because we need to consider the client's compliance with the accounting standards. That's what it's all about. Right, it's about recognition and measurement, and it's about fair presentation. So as practitioners, we should be aware of all the latest publications, specifically those that relate to sustainability reporting. And your clients need to also demonstrate that awareness of sustainability, and they need to be aware of whoever issues documents that affects them. All right, whether it be the IASB or normally the standards boards, the IAASB, and so on. All right. As part of an introduction, these illustrative examples were actually developed in response to a very strong demand from stakeholders. Stakeholders are the ones that drive the information that is needed, and the investors specifically said, listen, we are very, very concerned because we need to put our money into this entity. We want to invest money, but we can't just go and invest if there are so many climate-related uncertainties and, in fact, other uncertainties that there's no information given to us, so we can't make an informed decision. So they really were expressing concerns that the climate-related uncertainties was insufficient, or it was inconsistent with what they found outside the financial statements. So if they went and they did their own sustainability investigation or whatever, they would actually find that there were uncertainties and it was not disclosed in the financials. So there's inconsistencies. So in doing that, that's why the IASB then went and developed this exposure draft. And these proposed examples are there to improve transparency of information in the financial statements. We know that everything nowadays is about transparency and providing more information to the users of the financial statements. This is also to strengthen the connection between the financial statements and other parts of the company's reporting, like specifically the sustainability disclosures. All the new ones that especially the unlisted clients are not okay with yet. So these illustrative examples is one way that they are helping to improve the reporting of climate-related and other uncertainties in the financial statements. And in general, when we talk about uncertainties, we are normally talking about things where judgment is needed, or where certain assumptions have been made, or where there's a certain degree of iffiness. Right? What if this and what if that? And we don't have all the information, but this is what we think. So it's really just to make sure that everybody has the same information so that they can make useful decisions about their economic decisions where they invest literally. The comment period on this exposure draft is open until the 28th of November. So depending on the comments that are received by the IASB, they will then release these illustrative examples in a final format either towards the end of the year or early in January next year. Right, but yeah, we'll see. They're very specific. There are questions that they ask in the exposure draft if you want to know how to respond to the IASB. There's the front page of the exposure draft. You can see that it is definitely dealing with the IFRS accounting standards, and it's dealing with climate related and other uncertainties in the financials. And it contains, as luck would have it, 8 proposed illustrative examples. The entire document is 38 pages. It was issued by the IASB in July, and these 8 examples illustrate how companies apply the IFRS accounting standards when they are reporting the effects of climate-related uncertainties or other related uncertainties in their financial statements. So let's go and have a look at the table of contents. The table of contents here, there are the 8 examples, and you'll see there's materiality judgment leading to additional disclosures and materiality judgments not leading to additional disclosures. Now, materiality disclosures is difficult enough on its own because you've now got to look at materiality and what it is, what it means to you for each and every reporting period. You've got to say what materiality is. So it is going to be different. And we are dealing here with IAS 1, which is the presentation of financial statements, and then the new IFRS 18 that is replacing IAS 1 as your basis of preparation. Right. Basis of preparation is IAS 8. Then there's disclosure of assumptions when we are dealing with specific requirements, IAS 37, right, which deals with your specific assumptions there on uncertainties. And then your general requirements, that's your basis of preparation there. Additional disclosures dealing with what needs to be seen in the financial statements. Disclosures about credit risk, which is linked to IFRS 7. So these IFRSs contain exactly the requirements that must be disclosed. So the disclosure about credit risk comes from IFRS 7, which deals with your financial instruments. Then there's disclosure about decommissioning and restoration provisions. And there we would refer to IAS 37 because that's the one that deals with provisions, contingencies, and commitments. Right, and then the disclosure of disaggregated information is example 8. Now, each one of these examples is explained in length in this document, all right? So they'll tell you exactly materiality judgments leading to additional disclosures. These are the facts that apply to this scenario, and then they will tell you whether or not disclosure must be made and what disclosure can be made and what it should look like. So really examples, illustrative examples of what can be disclosed. Now remember, we are still in the realm of what? Uncertainties, whether related to climate uncertainties. And I mean, we feel it lately. Some would say that we've had summer, but yet then we have a cold front and we back to our winter clothes for like 2 or 3 days. We've never had these extreme climate changes. Every year it just seems to be getting worse and worse and worse. Dealing with global warming, all those effects, everything has an effect. Right. So the basis of conclusions on this ED, even though the 38 pages, the first 25 are dedicated to the examples, right? Literally about 2 or 3 pages per example. Some of them 2 pages as we get to the bigger ones, 3 pages there. But then we've got the basis for conclusions from page 25 onwards. Now, the basis for conclusions gives you a little bit more background as to why this happened. So if you are one of those people who need to know why things happen, then go and work your way through the basis of conclusions before you work your way through the examples, right? And then respond accordingly if you need to. Some important aspects in summary. Remember that the requirements inside the IFRS standards enable the companies to provide more information about their financial statements. So everything is connected. The information it provides in other general purpose financial statements, and there should be consistency between everything. So yes, the climate uncertainties can definitely influence the recognition and measurement of assets and liabilities. And certain assumptions that you used specifically like in impairment testing, that's not negotiable. You have to go. It's very important. All your assumptions that you use specifically on things like impairment testing needs to be documented because those are the uncertainties. Okay. Any item where there's a certain degree of estimation involved, or assumptions being made, you would have to go and do that. You would have to go and disclose that so that whoever then looks at the financial statements can say, okay, fine, I agree with this. I understand where they're coming from, and thank you for the information. So these examples really focus on materiality judgments, number one. And the materiality judgments, remember I told you it must be done at each reporting date because that's something that is specific. Even your assumptions, disclosures about assumptions and estimation uncertainties. It's all about what you base your decision on at that point in time. So what information did you have at that day? Not something that you had a week in advance because you wouldn't be able to include that. So it's important that you disclose what is at your disposal now. What have you got to use as additional information now? Also relating to your disaggregation of information. So yes, the principles and the requirements that are illustrated in these examples apply equally to other types of uncertainties. It's not just about climate-related uncertainties. Remember, we said it's about any uncertainty. So yes, it's about climate-related uncertainties as well as any other type. And like I told you at the beginning, the IASB consulted with the ISSB throughout this project. The ISSB that's the Standards Sustainability Standards Board that was responsible for the drafting and the release of IFRS S1 and IFRS S2. So they are responsible for the sustainability standards. And the IASB is about the accounting standards. So yes, even though this involves IFRS S1, the majority can be pulled back into, like we saw on this page, all the separate IFRS documents and the IASs that it relates to. Okay, so very important there. There is no formal effective date yet because this is still in draft format. So we don't know if there are any transitional arrangements yet, and we don't know what the formal effective date is. We will see that once the exposure draft is then issued in a final format, right? As the definite new final document. So we'll know that after the 28th of November. But that then, the source document is your exposure draft, and there's your link if you want to go and download that specific document. And that then, ladies and gentlemen, is it. I hope that you enjoyed this document on the illustrative examples on sustainability and climate-related uncertainties. From me, Letty Janse van Vuren, thank you and goodbye.